right, let's pick up where we left off for charitable contribution deduction limits. And this is just a table that I would highly recommend you look over, because if the charity is public or private, there are different thresholds. As you can see, for private charities, it goes down a bit. And that way you'll know what cash and other property are given and the fair market value and their limits. So this is critical. And this is also a highly audited area, is charitable contributions, because most taxpayers do not keep all of their receipts. So now let's go on to casualty losses and basically the deductibility. So only the amount of the casualty loss incurred during the year that is in excess of $100 per incident and 10% of adjusted gross income. Notice the word and, so it has to be $100 per incident and 10% of adjusted gross income for it to be deductible. You have to file an insurance claim in order for it to be deductible, and then they are limited to unreimbursed losses. Fire, earthquakes, theft, those are all parts of casualty losses. Then we have miscellaneous items that are deductions. For example, if it's 2% of adjusted gross income, then it's deductible. Unreimbursed employee business expense, that's also on Form 2160. I highly recommend you take a look at that, because sometimes they are deductible. For example, union dues, and if you traveled but you're not fully reimbursed, then you might be able to claim those deductions. Again, your tax preparation fees are deductible, safety deposit box, any investment advisory fees, and financial planning fees. So several of you are looking to be certified financial planners. The fees that you charge, you make sure you deduct it off of your client's returns. Then there are phasing out of certain itemized deductions, and in 2016, the total of itemized deductions, with the exception of medical expenses, investment interest, and casualty losses, is reduced by 3% of the amount by which a taxpayer adjusted gross income exceeds these thresholds. So if you are single making over $254,400, then you have a phase out of your itemized deductions. But the total reduction cannot be more than 80% of the total applicable deductions. And as a certified financial planner, you might find yourself having clients in this situation. Per person, you are allowed $4,050 for your exemptions, and that is allowed for yourself as the taxpayer, spouses, and dependents. And dependents are not only children, but that you can also have other relatives where you support half of them. Half of the support is given by you. So if you have an elderly parent, and any unrelated members where the support test. So usually the support test is met if you provide 50% of their support. There also are phasing out in the personal exemptions as well, almost same amounts as before. So just be aware of that. And then taxable income. So now we subtract the greater of the standard deduction or itemized deductions from our adjusted gross income. We subtract the personal exemptions, and then that amount is used for the tax liability. And then there are tax tables associated with our filing status. So the tax liability is basically, you have the rate schedule, you have self-employment tax, which is usually about 50%. We're going to talk more about AMT's alternative minimum tax. There's a kiddie tax. So there's all types of taxes that you have to pay, and you want to make sure that you are adhering to all of them, because the minute you don't, then there's penalties involved, and then there's issues. So the amount of tax to be paid is used based on the tax schedules. As you will note, the highest tax rate now is 39.6%, almost 40%. And taxes paid at the 10% rate up to a certain level, then 15% on the income after that. Tax brackets are adjusted for inflation annually, and capital gains and qualified dividends is 15% tax, but 20% for taxpayers that are in the 39.6 bracket. And so remember, the tax number is the federal income tax before add-ons or credits. Fit back. Federal income tax before add-ons or credits. So the kiddie tax is if your child is under 19 or 24, if they're a student, you are taxed on the earned income. If the first $1,050 is tax-free, that's your child standard deduction, and then the next $150 is taxed at the child's taxed rate, and the remaining is taxed at to the child at the parent's marginal tax rate. So then you have self-employment tax and Medicare taxes, and then you have Social Security taxes. This is 12.4% on $118,500 in 2016. Now, if you have more than one job or if you switch jobs, you might have a refund on that because you should only pay 12.4% on $118,500. 2.9% is your Medicare. These are all payroll taxes, and you can use these to calculate your net pay for yourself or for your clients. And then remember, 50% of the self-employment tax is deductible from your adjusted gross income. Then we have a self-employment tax example, and you will see what you make and then each of the percentages. So we are just deducting that, and then you get your total self-employment tax, your additional Medicare tax. I would highly recommend you do these in Excel because this is what you would do for your client, and you would make sure you're just kind of verifying that everything works out pretty well. And don't forget, the 50% is deducted from adjusted gross income. So make sure that you're aware of all of that. You'll get plenty of practice on this in our multiple choice questions. Then you have a domestic employee. You have to pay Social Security and Medicare tax on 100% of the compensation. And Social Security is again limited to $118,500 and then 2.9%. And there is no above the line deduction for 50% of domestic employee tax. So make sure you know that that's an exception that is also tested on the CFP exam. And here's another example. You could see how we work through all of that. So make sure, and you'll get plenty of practice. We're going to have quite a few calculations in our multiple choice questions. So now you have tax credits, and unlike deductions, which they reduce your taxable income, credits offset your tax liability dollar for dollar. So you have credits for education, which you should look at, child and dependent care, child common taxes, AMT, alternative minimum taxes. And, this was a bit high there. Sorry about that. And basically, you'll have the American Opportunity Tax Credit, which was called the HOPE Credit, the Lifetime Learning Credit, which some of you may be eligible for now, and then you can claim that. So basically, remember, here you get a credit of 20% of tuition expenses up to $10,000, so that's $2,000 maximum, and you don't have to be a full-time student. So this is a credit that sometimes is not taken when it should be. Then you basically have a tax credit for qualified expenses to care for a child, and for one child or dependent it's $3,000, for two it's $6,000, so that's also allowable. And you have a $1,000 tax credit for any child under 17 who qualifies as a dependent. And then basically it's phased out as of $20,000 of income above the threshold. So you'll go through this $4,000 tax credit. You can see how we came up with all of those. Then you have premium tax credits, and taxpayers with moderate income, and then they purchase their health insurance coverage through the healthcare marketplace, you might have a premium tax credit. So this came about because of Obamacare, and so if you're purchasing it on the healthcare on the exchange, you might be eligible for a premium tax credit. And then once you realize what tax you owe, you have to make sure that you pay it. And for employers, they're required to withhold federal withholding tax. And then that amount is given to the IRS, and then whatever you owe, that would be what you pay, or whatever the IRS owes you, that would be your refund. And now we have your estimated tax payment dates. So if you do owe money, you can separate it into 4 different types of payments and installments. And then you might have some fringe benefits like prepaid legal fees and some cafeteria plans that you might have to get taxed on. And cafeteria plans are covered under Section 125, and so there's allowed options such as like group term life insurance, but deferred compensation, educational assistance, those are not allowed. So you may be taxed on those as well. And your flexible spending account, you can reduce your compensation, and then that goes into a specific account. Also, sometimes parking and daycare expenses may be deductible. Some of your fringe benefits that are excluded. So here is important: excluded any type of discounts, any meals, any employer-paid business travel, or any type of premises like athletic premises, any dependent care. But what is included is the personal use of an employee card, car, or any free tickets to like sporting events. So this chapter covered quite a bit of information. Please take your time in going through all of it because it is very important for the CFP exam. Thank you.